Welcome to the Algorithmic Advantage. We're here to expand the toolkit of the quant trading community and introduce investors to the many advantages of systematic trading. Our goal is to educate and inspire as we embark on a captivating journey into the vast knowledge and experience of leading portfolio managers and other experts in the field.
Kieran, I'd love to hear a bit about your background, mate. Like, how did you get into trading? How did it all start for you? Were you a discretionary trader?
Yeah, so I started as kind of an investor in crypto I say the early days. I don't think I was too early, but looking back now, it feels that way. So in 2017, my dad actually got me interested in Bitcoin. And at that point, I just kind of got enamored with the markets. Fast forward a year, I found FX and just started trading, losing, following the wrong sorts of people. That went on for roughly about a year. And then I found my first kind of true mentor, as you would call them.
Nice.
And that kind of, set the groundwork for the rest of my career. I think to this day, I still take lessons from what my mentor taught me back then, which kind of laid the foundation for everything else that I've done. And then we fast forward 7 years from then, and I found systematic trading through another contact that I had. He showed me a few bits and bobs of what he does. And again, I just got enamored with his processes, went full steam ahead. And, a year and a half later, it was the best decision I ever made.
Yeah, of course. We both know Martin Tinsley. You've worked with him. You're working at Darwinex. So that kind of closes the loop of how we obviously all started chatting together. How did you go from, trading yourself to working in Darwinex?
It was a bit of I always say I'm a very lucky person. I tend to fall into lucky situations. Although
Excellent. We should hang out more then. Maybe some will rub off.
That's the way I frame it. But I guess a lot of it is just I try and take opportunities every time they arise. And that kind of moral of the story is throughout my whole journey, listening about Bitcoin, then finding out about FX, then systematic trading. But to bring it back to Darwinex, I was running some trader events a few years ago, and we were looking for sponsorships. But the key thing that we wanted was we wanted a sponsor who actually aligned with what we believed in. So instead of having just some random firm who doesn't give a toss about their traders, frankly, we wanted to work with somebody who we knew would fight our battles and we could fight their battles. And there was an alignment on ethics, morals, and all of that good stuff. That kind of narrowed the field down massively. And I got speaking to the guys at Darwinex. I ended up then taking on their social media and just doing a few, kind of little jobs for them. As that relationship progressed, it was always, oh, Kieran, do you want to do some more stuff for us? Do you want to do this? And like I say, whether it's luck or whether I'm kind of opportunistic, I don't know, but I just accepted everything that they pushed my way. And I've been there now 3 years in total, and my role has just progressed and progressed and progressed. And I now am the head of UK growth and business development for Darwinex, but I also cover English-speaking countries, so the US and other countries too. And again, it's one of the best things I ever did was, settling down a company again that I have similar ethics and morals to, because before that I was trading full-time. And as a young dad, it was very, very intense. So having my job there, which is full-time, it kind of feels like a superpower to me now, because it gives me the ability to know that my family's secure, know that I don't have to make X% this month to be able to pay my mortgage, my bills, and all that sort of stuff, which I consider a bit of a superpower.
Yeah, while you're still working in the trading environment. Yeah, you still get to talk to traders and all the rest of it.
Without my job, I wouldn't be here speaking to you now. I wouldn't have the connections that I have. I wouldn't have the network that I do, all the knowledge that I have either. Like I have access to some fantastic people, but it all comes back to Darwinex. It's expanded my reach massively, and I will always be grateful for that.
So you get to work in Spain a bit. I've lived in Spain. I mean, I love Spain, but because are they headquartered there? Is that the way it works?
Yeah, so we have a few headquarters, but our main HQ is in Madrid. So I go over a few times a year usually, which is, just the best. Absolutely, fall in love with Madrid every time I go there. But we also have a HQ in London for because we have different regulatory licenses, we have to have different setups in different countries, right? And we're also setting up the Cyprus headquarters at the moment. We've hopefully just secured our Cyprus license, so that should all be set up in the next few weeks, and that will make their HQ out there official too.
Well, a shout out to all of our subscribers in España, and mate, yeah, we love the place. I love Madrid, Barcelona as well. I love the north of Spain. I lived in the Canary Islands mostly. Beautiful. And very fond memories. I got to get back again soon. And while I'm thinking of our subscribers, listen, there are a lot of people who watch this channel, Kieran, who are actually not subscribed. So we see that in the statistics. So please do us a favor. If you're watching and you're not subscribed, if you've watched more than 2, then by all means subscribe. I really appreciate it. It's really helping. We're trying to ramp the numbers a little bit at the moment. So thanks for that. Mate, all right. So yeah, look, obviously that frames a discussion. We've chatted a couple of times. You obviously know Martin Tinsley well. I just had a great pod with him, talked to him a lot about all the interesting things that he's doing and building and the way he trades. You both trade on Darwinex, so I'm definitely keen to chat about that, because commercializing trading, I chatted to Martin briefly about this on the show, is something that I think all traders could be thinking about. So keen to get into that. But of course, being the show that it is, I have to talk to you about your trading and what you do on there and how you do it. So you found systematic trading. What were the first steps out of the gate once you got involved?
So it actually come at a really interesting time for me. I was trading kind of an assessment for a prop desk as a discretionary trader. So I had a risk manager, I had more experienced traders around me, and it was fantastic because I just lapped up the experience and the knowledge from these guys, which I will again forever be grateful for. But when I was in that environment, I kind of felt like something wasn't clicking. I'd had the processes that I'd had for 7 years, and then all of a sudden I have this guy who's managed funds down in London telling me that a lot of what I'm doing is not wrong per se, but needs adjusting. And so I was a little bit kind of on the ropes with how I was trading anyway. So it's a bit of a reality check. And actually, funnily enough, it came from me recording a podcast and being the host. And I recorded 2 podcasts on the same week. And actually, today, they are both my team members at Darwinex. Both of the guys that I interviewed, I ended up hiring, and now they work in the growth team with me, which is just fantastic. They're both amazing people. But the theme between the two of them was they were both systematic or algorithmic traders, however you want to frame it. And so not only was I on this kind of, as I say, on the ropes with my current process, I then got chatting to a couple of systematic guys, which then unlocked a door for me in my head. And I was like, okay, well, here's me struggling, not P&L wise, but process wise, mentally thinking, am I good enough? Am I not? This is a new world. And then I go, well, these 2 guys are smashing it. They're independent, because they're trading on Darwinex. And I was like, I need a bit of what they have, or at least I need to explore it. So I just asked them as many questions as I could. Helped that I ran a podcast with them because I got to do it professionally. But then I spoke to them afterwards, became really close friends with both of them. Again, ended up hiring them in Darwinex. It's one of the things we love to do. We love to hire from within and bring our own traders in. but yeah, so I then had a few calls with them, tried to understand, kind of what they were doing and how they would frame things. And then in my head, I'm going, well, I'm over here, you're over here. How do I get from this position to that? And actually what I ended up doing was dropping everything that I did. So the hypothesis that I had, the processes that I had, I tried to leave it all at the door and start 100% from scratch. And again, I got super, super lucky in the early days. I had, I had a really good run on strategies that probably now would make my toes curl if I was to look at them.
Yeah, right.
But, here we are.
There's always an element of luck in trading.
100%. And, I don't consider myself an expert, right? You've had some fantastic guests on this podcast. And I kind of feel like I'm a dwarf walking with giants right now to be on here. So I appreciate, the invite to be on here. But I still feel like I'm figuring a lot of things out as I go, which I love because I love learning and process, and I'm still nowhere near where I need to be. But every down day I have, or every green month, whatever the variable, I look at it as a lesson. Okay, how do I repeat this? Or how do I not eliminate the bad days, because that's never going to happen, but is it something that's strategy specific and it's baked into, my testing, therefore I know it's going to be repeatable? Or is it something that I've done wrong? Did I get, attacked by the broker when spread blew out? Or should I not have entered just before rollover? If it's something that I can do, I try and teach it as a lesson. But yeah, I'm going off on a bit of a tangent there.
No,
so
that's cool,
I'll
man.
bring it back to
do
you.
it.
Traders, crypto is not a wild, unruly market. It's an asset class with 500% more time for price discovery and opportunity. My new course, Crypto Trader's Edge, is now live through Algo Advantage, one of the top quant pods and academies out there. A full systematic framework, backtesting, strategy development, validation, real edges with full code, not hype. Links in the description, or head to my Substack at Rectelligence. Now back to the show.
Well, what I was thinking there is, and yeah, man, happy to have you on the show. And I think everyone from getting people on from all walks of life and all stages is all part of the journey, part of the learning curve for everyone who listens. So it's all super valuable. And what I was thinking there was how early on did you start trying to, do what you were doing on the Darwinex platform or on another platform? I assume you went straight there. And how did that shape your trading? Were you trading for a while first and then you went, oh, hang on, I could do this on Darwinex? Or was it pretty early on that you discovered that?
So I started making the transition in January of 2025 from discretionary to systematic. And then I started my track record in April, which was kind of the first time I took anything live. So I started with a Darwinex account. But the main reason, outside of the fact that I work there, because I'm always conscious, right? When I'm talking about Darwinex, I don't want people to just think, he's a salesman, he's trying to sell us on. I genuinely use it myself, and for specific reasons. The main reason for me was I was building a portfolio of strategies, and obviously, any trader knows you need a sufficient amount of margin in your account, right? And we have a program called Darwinex Zero, which allows you to trade with a virtual balance, at least to begin with, of 100K or $1 million in futures. So that solved the margin problem for me, because to be completely honest, I was brand new to systematic trading. My strategies hadn't proved themselves. I wasn't ready to go and drop. I think the minimum margin that I needed was about 60,000. I wasn't willing to drop 60,000 into a broker account to test whether I was right or wrong. So that kind of solved the problem for me. Is I can get this account for next to nothing, get the margin that I need, but it also runs on live feeds with live commissions, swaps, spread, all of that sort of stuff, because we're then copying it on live capital on the back end. So there's no point in you trading a demo account per se. And having all these artificial conditions, and then when we try and copy it to an investor, the investor just gets absolutely shafted. So there's no difference between the Zero account and kind of a actual Darwinex brokerage account. So that's kind of why I started on Darwinex. And then over time, I mean, I have a bit of an unfair advantage because I would say I'm kind of the face of Darwinex these days, at least for English speaking countries, because I live stream, I'm on content and all that sort of stuff. So people have watched my journey from knowing absolutely nothing. In fact, they probably remember the days where I was a discretionary trader because I've been streaming to them for years. And then they've seen that transition and they've watched my record grow and grow and grow. And so my AUM, just as soon as I was open to investors, my AUM skyrocketed. And it's still growing to this day. And I think it's all because people have been with me on that journey, and I've been super open in how I talk about it. And again, never pretending to be an expert. I'm just a guy who's figuring it out and done really well through that process. I think last year, so I only started in April, but I pulled some statistics on one of our databases, and last year my record was number 2 out of like the 10,500 traders that we have for like annualized return based on the risk taken, which for me, I was like, that this is why I don't sell Darwinex. I'm like, I am the reason why you should come to Darwinex, because I did it right. And it made everything for me. It built my career to a point where I don't think I could have done beforehand. Again, I'm going off on a bit of a tangent. So,
the reason
I'm used to talking to a camera on my own, so I just go off on loads of tangents.
That's cool, man. Don't worry. All traders can talk, I have learned. But the reason why I ask is because, many of us have looked around at commercializing our trading, have run money for other people in various ways through the past, whether under funds or whatever the format might be. Of course, it's usually complicated by needing to be licensed, and regulations are just getting higher and higher. But the reason why I ask is there's this whole opportunity set, the way I see it, where if you see a certain path for commercializing your trading, then you shape your trading in that way. So it might determine the kinds of instruments you trade, the time frame you trade, the software that you use, stuff like that, because you can see like, well, there's a path that way to commercializing it, which in my mind as a sort of businessman, that makes a lot of sense, right? And so, I guess, what I want to ask is there a certain kind of trading or trader or set of instruments or timeframes that work best for gaining AUM in Darwinex?
I'm going to say there's not. At face value, there's no, oh, this is favored over that or that's favored over this. I would say internally, or at least internally with the investors that use the platform, they have access to our metrics. Our metrics kind of take what you do on the back end and put that into scores, if you will. So, for example, loss aversion. How well do you recover from losses? How far do you let them run against you? A mean reversion trader is probably going to have a pretty low loss aversion score, but they're going to have a massive capacity generally. And so I wouldn't say that there's a specific style or instrument that gets favored. The only thing that would affect that from our perspective is our master fund invests in our top traders. I think right now there's over 200 traders in the fund. With that, of course, we are running a fund. So we have to look at where our gaps are within the fund. Okay, are we too exposed to, NQ? Are we too exposed to gold? Well, if we are, there's no point in us adding another trader in, because that then dilutes the diversification within our portfolio, and we may as well just invest in gold as opposed to all the traders who are trying to trade it, right? So I would say it's less about optimizing how you trade for the investor. It's just about being diversified enough that an investor would look at your statistics and be like, okay, that kind of ticks boxes that I need. The only thing, going back to one of the points that you said, where you would optimize how you work or how you trade. I actually have a really interesting story about this, of something that I've been working on for the past couple of months, actually. So I was open to investors in January based on the length of my track record and some performance objectives that I'd met. As soon as that live money started coming in, I noticed how poor my capacity was. You know, I was trading strategies that were fantastic from a performance perspective, but actually couldn't facilitate much, if any, size at all. And it was really dragging my portfolio down, because it got to a point in, I think it was in March, where my used capacity was at about 47%. And that was with 1.6 million AUM. So I was looking at that and going, well, my hypothetical capacity based on Darwinex estimates, my own estimates, was about 30 or 40 million. And yet I'm almost 50% at capacity at only 1.6. So I was about, 4 million, maybe just under 4 million live capacity based on my real fills and the real trades that I was actually executing. And so it got me, I started having conversations with Marty Castani, who is a quant in Darwinex Labs, and Javi Carlan, one of the co-founders of Darwinex. And I just said to them, look, the performance is fine. I don't need to adjust anything on that, but I really need help with my capacity, because if my cap is 3.5, 4 million, it might make a nice side hustle, but is it going to make me super, super wealthy and, change my life? Maybe not. And so we sat down and we had a conversation, and Javi said to me, the best thing you can do is split your orders. Because we're trading through a CFD broker, of course, liquidity is not, it's finite, and you're kind of at mercy of the liquidity providers who provide to the broker. And so he said, try and split all of your orders, get a delay of, 3 seconds, 5 seconds, however long it is, depending on the liquidity of the asset, and do it on entry and exit. Apart from stop loss, if you're taking a stop, get out of the market. But if you're hitting target, or if you're closing the position manually, try and delay it. So it got me thinking. I sat down with my good friend Claude, and we built an order splitting tool that effectively what it does is, when one of my strategies says, okay, execute, we need to go long on NASDAQ now, or whatever the asset is, it'll ping N1, which is the first position. It will then have a delay of a few seconds. I can change the inputs, which I do based on which asset I'm trading and also the strategy. So for a breakout system, I'm keeping the delay as low as possible, because I've had it before where it'll break out, N1 will fire, then N2's up here, and then it pulls back, and I'm like, I need the delay to be as low as possible. Whereas mean reversion, it's very rare that I'm catching the tops. So I'll put, a 30-second split, for example. And I also do that on exit, up to X amount of positions, again, dependent on the strategy and the asset. And 2 months later, my capacity went down to 1%. So my used capacity went from 47% to 1%, which meant I had a live capacity of roughly 180 million, because my AUM had also increased to 1.8 million at the time. And so it just completely changed the scope for me. That's the only kind of thing that I would say, like, I would be changing my process to satisfy Darwinex or investors, or even just the career in general, because you can make a lot more money on 150 million than you can on 4 million. But it was a super interesting journey for me, and I'm still working out the kinks, because like I say, I have had some trades where the delay has not shafted me, but it's not been ideal.
No, yeah. So welcome to, the world where a lot of institutional quants actually end up spending most of their time, because there are a lot of strategies that, the big pods leave alone because they only have a capacity of 5, 10 mil, whatever it might be, and then it starts to struggle. So that's good for retail traders, and it's great for us to play in that space because we can and because they're leaving it alone. But the order execution algos and the way that we execute in order to increase our capacity, gosh, that becomes a really big deal. And yeah, so no doubt you'll continue to work on that and diversify, add more systems that by the nature of doing that, obviously you're going to split your orders and you're going to have more things going on. What's cool about working with Darwinex, I guess, is you get to commercialize and actually make some money in the process of learning, which is pretty cool. So, I mean, I'm curious to hear more about Claude Code, but before we go there and talk about AI and trading, I've been thinking about that as well recently. Just your trading, like let's cover off where you're at now. What sort of strategies do you trade on? What instruments over what time frames? What do you favor? What's your philosophy there? Yeah, what kind of trading are you doing?
So for the most part, it's intraday FX trading, which I know most people who are watching this are probably going to go, "Oh my God, that is the worst thing he could possibly do." But I've been trading FX for 8 years. I like the market, specifically yen pairs, less so the more liquid, euro dollar, pound dollar, all those sort of stuff. I trade metals. As kind of a summary, I trade metals. I don't really trade commodities, although I used to trade oil, FX, and indices, with a focus specifically on NASDAQ, previously S&P as well, but I'll tell you why that's previous in a moment, and also the DAX. I've got some really solid systems on the DAX. My portfolio currently has 28 strategies within it. However, I'm currently building, I'm putting them all into a single portfolio file as opposed to running them separately, so that I can kind of add a second brain, or what I would call my second brain in, which would have its own risk management processes, so that I don't have to monitor my P&L all the time and be like, okay, well, I'm too overexposed to this asset or what have you. It'll have regime filters built in, volatility filters built in, just so that I know that even when I'm asleep, my brain is still at the desk kind of thing. But that's kind of something that I'm working on right now, whereas I still have a heavy hand watching what's going on. For the most part, I trade breakout strategies with a few mean reversion in there. I have one or two longer term trend following systems. My main processes for building strategies has always been coming up with a hypothesis, whether it's I've read something or it's something I've explored in the past. I mean, I've got a lot of years under my belt. I know compared to some of your guests, I'm probably still a baby. But I have read a lot of literature, and I try and take all the ideas that I know and put them into a strategy. 99 times out of 100, they turn out to be a dud or, not worth my time. I'll then put that strategy together. I usually use block builders, because it's the quickest to market. How can I prove that this hypothesis is either right or wrong? Drag a couple of blocks into a flow chart, go away and test it. If it doesn't work, fine, we'll move on to the next idea. If it does work, okay, well, now I need to get this code a little bit cleaner, a little bit more me. I need to get my own security built into the code. I need to then do my proper testing. And yeah, I don't know if that kind of covers that question.
Yeah.
Yeah.
How many strategies do you generally trade on each instrument? Is it just one for, yen dollar, one for pound dollar, or you could trade like one breakout, one mean reversion, one longer term, one shorter term, and you just keep diversifying?
So I was very, very heavily weighted towards dollar, yen, and gold. I think roughly 55, maybe 60% of the portfolio was those two assets. And last year that paid dividends, right? And the strategies that I have individually are all fantastic. In April, I had the classic, none of the strategies are correlated. And then a bit of volatility comes and boom, they're all correlated. And it kind of got me thinking, okay, well, I need to restructure the weightings towards all of these assets. So again, I'm in the process now of trying to reduce my exposure to not just those two assets, but every single asset, and focus on, okay, how do I create my book so it's equally weighted to all of these different strategies and assets? So indices, metals, commodities, FX. Okay, you all have, roughly 25 or 20 or 30% of the portfolio. Split that into individual assets within there. Ensure that those aren't correlated. If there's, for example, a dollar yen strategy that then correlates with gold, I mean, to me, it's probably more coincidence than it is a repeatable correlation pattern. But I won't know until I go into the kind of individual testing of that. But I'm trying to, at the moment, reduce my reliance on dollar yen, because this year it's been, the Bank of Japan are constantly doing the dirty, and it's just become ridiculously difficult to trade this year. Whereas last year it was super, super easy.
So you've got to, like all of us, you've got to be constantly iterating, looking for new ideas, developing your portfolio, adding to it. And I mean, I think it's really interesting because I think, yes, you're different to many of the guests that we've had, but probably really interesting to still a huge part of that audience, because they're going to really relate, right? They're going to sympathize with the journey, especially like I didn't come through that FX short-term back. Well, I did play around. I played around with everything, I guess, but I wasn't really that focused on the super short-term that much until I did get into. In fact, when I was living in Spain, I traded tick charts on the S&P E-minis. Discretionary trader, short-term stuff, and I had a bit of foray into it. But once I found, that was before I really discovered systematic trading, I guess. I discovered it through that process because I wanted to keep testing what I was doing and validating it. And I just found that it was increasingly difficult to try, and I'd spend hours and hours, and I'd have validated some small percentage of my trades, and I thought, this is ridiculous. There's got to be a better way to actually prove that this works. What's the shortest bar size that you look at? Are you looking at sort of second bars, minute bars, tick bars, or it's more like 4 hourly?
The lowest bar that I have is the M1, but there's a caveat to that, in that it will only trade once per day, and it's not specifically trading anything to do with an M1 bar. It's just taking a range of the high and low with the M1 bars within a specific time period, and then it uses X amount of M1 bars look back for the stop loss. That's all. But it's still a once per day strategy. So it doesn't mean it's firing off on all cylinders. It's just it uses the M1 bars specifically for the parameter setup. But usually I would say majority of my strategies are built on the daily, with a few H12, H4 and H1, and a couple of 15 minute as well. I think I have one 30 minute too. But for the most part, I'll be honest, my strategies are designed to trade infrequently. So my time out the market is 92%. So I'm only in the market 8% of time. And that's a statistic I pulled from Darwinex, from my metrics, because I didn't realize that. I didn't actually know that until I looked at it, and I was like, oh wow, well that's probably why I'm not grey yet, because I'm never actually in the market, but that works for me. I think even though, with discretionary trading, you have to find a style that suits you. Everybody knows that. But I also think that spills over to systematic trading. I couldn't be sat here with hundreds of positions firing off every single day. I still like a calm life. I still like to know, okay, what's my max exposure on the day? Well, I'm only going to be taking a couple of trades anyway, realistically. And that kind of works for me, right?
And do you think that comes from your discretionary trading background as well? Like, really just going all in when the odds are in your favor and when not, stepping away? And
I think so. I mean, I'm very risk averse as a person anyway, which, how can you be a trader when you're risk averse? But I've had enough times in my life where I've been burnt, with money through trading and investing. And so I've learned to maybe I'm not risk averse, maybe I'm just sensible. So I'm always looking at what's
in this
I'm
game.
looking at
You've
what's
heard
my
You've heard
downside.
the adage. Sorry, Kieran, I got to inject this one. Remember this one. There are old traders and there are bold traders, but there are no old bold traders. That might be before your time, that one, but yeah,
I've heard it. Yeah.
But go on. Sorry to interrupt.
No, it's fine. It's fine. With my breakout systems, for example, they are trading breaks of daily bars usually. So those opportunities don't come around every single day. It's not, well, unless you're going long only on the NASDAQ and S&P or gold last year, of course. But if I'm looking at a previous 100 bar look back period and I'm trading the break of that, like what you just said is like you kind of have to be bold in that moment to take that trade, because that's the only time that opportunity is around. And if you pull that position or you don't take the trade, which is very easy to do as a discretionary trader because you're the one pressing the button, and if you do that, well, guess what? You might be waiting another 100 days to take that position. I mean, bit of an extreme example, but it's true. Like I've had strategies that just take their time and fire once or twice a year, which these days I'm less a fan of, because I would rather a bit more frequency, even at the sacrifice of performance, just so I know that there's more weighting to the system, or it's proven itself a little bit more. But yeah, absolutely. Like my discretionary background molded me into the trader that I still am today, which is why trading breakouts became so difficult, because I was always a mean reversion trader. So I'd see the break of a massive swing high in the daily, and I'd be like, oh, well, there's no way it's going to keep going. But then, boom, keeps going. Oh, hit target, great. Like that's so strange. I'd have been trying to short that, a couple of years back. So it absolutely had an influence on me, and I've had to relearn a lot of things, or not even relearn, forget a lot of things that I'd learned over the years. And really put my foot down on the gas when the market's hot.
What about your mentor that you mentioned, Kieran? Like, what were some of the key things that you took away from him or her?
Probably can't say them on here because there's a lot of swear words. But again, one of them was, don't take your foot off the gas when the market is hot. One of the kind of messages that he put across was, most people, if they've had a good day, they'll go, oh, do you know what? Happy with that. I'm going to close down for the day and whatnot, move on. Or month even, it might be up 2% for the month, and they go, well, happy with that. Had a bad month last month, so I'm just going to leave it here. And his ideology was always, if a day starts out well, 99 times out of 100, it's going to end even better. If it starts out bad, it's going to end even worse. It's very rare that, you'll start your morning with a few losing trades. You might be down 0.5%, 1% on the day. It's very rare that you're going to get a trade in the afternoon that reverses that and puts you back in the green for the day. So, if you're going to step away, it's after a period like that. Whereas on the flip side is, we can't be scared of giving profit back. So if you've, and this is more relevant to me now than it ever was back then, is like, if I'm up on the day or on the week or on the month, it doesn't matter what that number says. I can't turn my stuff off. Like, I can't take a step back. I have to keep trading, because I had last year in May, I had a 10% month. And I'm like, if I'd have switched that off after 2 or 3%, I'd have, my record would have taken not a massive hit, but it wouldn't look in the same state that it would for the year overall. And, I've had a lot of friends over the years who've kind of all come from professional backgrounds within the space, and they've all repeated that's the same message, is that 1 month or one trade or one quarter can really pay for your year. And so it's about letting that happen. And that's kind of the key thing that I've taken specifically into systematic trading is, the guy who taught me initially, in fact, you've met him, Blaine. He's the one who initially introduced me to systematic trading. And he's been flat pretty much from the start of this year up until now. And we talk about it often, and he's like, it is what it is. H2 or it'll most likely have a great half of the year, or Q4, who knows, could have a 15% month. And I'm like, that's the mindset, because you've got to be able to sustain these flat periods.
I mean, what happens is the average trader and investor, everyone really, they start comparing themselves to the index that they otherwise previously tried to design systems that were non-correlated with. So everyone wants to be non-correlated to the index until the index is doing well. And and then it's like, well, why am I underperforming? Well, because you're not correlated. And you get caught up in that trap of comparing and contrasting. You've got to really go back to the goals that you laid out for yourself when you started the process. Yep. What were you trying to build? Were you trying to be correlated to the index? No, you were probably trying to, grab alpha from wherever you could, and you were focused on absolute returns. So forget the index. Like and then over what period of time anyway are you interested in comparing yourself to the index? Like, we're there for the longer term, really, in trading. So yeah, 100%.
I also think that because I've noticed it quite a few times, and I was a bit of a victim to it myself before. Is like comparing myself to the S&P, for example, and being like, well, if I don't make 15% this year, what's the point? And I'm like, but there's no alternative, because what I do now is super leverageable. I can take on investors' capital and trade money that I don't have. I can't walk up to an investor and say, give me 5 million and I'll just buy the S&P, because why the middleman? They could just do it themselves.
Yeah.
And also on a risk-adjusted basis, if your downside is a fraction of what you would see within investing in an ETF or an index, it's just a whole different conversation. It's a whole different world. So I get the mapping the performance against one another, but I also don't think, for you as the trader specifically, I don't think it's kind of comparing apples to oranges, in my opinion, because like I say, I can only leverage the capital that I have in my bank account if I'm looking to invest it. Whereas if I'm looking to trade, I have millions under management now. I don't have that in my bank account to go and allocate out to my strategies. So it's not leverageable. So again, I think there's some flaws to that comparison from the trader's perspective, and nobody should get lost in that. I've underperformed the index this year. Well, guess what? It was very, very difficult to outperform the index on specific years. Because that bad boy is no joke. Let me tell you that right now.
When you do increase your AUM there, are you looking at potentially moving into futures as potentially a more efficient way of executing, managing larger positions, cheaper, maybe more efficient, less slippage, etc., centrally cleared instruments? Because you can do that on Darwinex now, right?
Yes, and it's something that I have kind of on my roadmap. I would like to get, so the second brain I was talking about earlier, I'm building that in Python so that it's kind of interchangeable regardless of the platform that I'm trading on. So I can kind of have that running on my PC or on my server and have it feeding information to whichever platform, whichever instruments I'm trading, and it sits kind of separate, with the goal of, when I do eventually move to futures, or not move to futures, but expand into futures, that brain stays the same. So that's kind of phase one of that roadmap. Now that I've increased my capacity a lot, it alleviates the pressure of needing to shift. But I would say probably at some point in 2027, I'm going to sit down, lock myself away for a couple of weeks and really start the migration process. I personally don't know whether it's easier to build a bridge and still execute the way I do now and have the bridge for do all the execution. I know a few guys who do that. It's probably the easiest way to do it, but the least robust. Or do I rebuild all of the strategies in the portfolio for whatever platform I'm now trading on? These are questions that I haven't answered yet.
Yeah, fair call. What are the platform restrictions when you're trading on Darwinex? Because it's a pretty heavily sort of MT4, MT5 environment. Am I right when you're trading CFDs there?
Yeah, and we're currently exploring options for futures outside of MetaTrader 5, because any serious futures trader knows that MT5 just isn't. It's not ideal for trading futures. So we're integrating with TradingView, which again for professional traders probably means very little, but for the retail guys who love TradingView, it's great for them. We've hit capacity on our master fund, so we're looking at integrating futures within that too. So these are all internal conversations we're having right now. So the honest answer that I can give you is I don't know where we're going in terms of trading platforms, but it's something that we're actively exploring because we need to accommodate for bigger traders and more professional traders as well.
So Darwinex Zero, when you can trade on your IB platform, is that sort of a separate scope here? Because you can do that,
you
right?
You can't trade Darwinex Zero with Interactive Broker. That's only through Darwinex. There's a few limitations with that, to be completely honest. And I don't think we have many users who trade through Interactive Brokers because we only really started integrating futures properly recently. I think our biggest trader does trade through IB, or no, he doesn't. I'm talking rubbish. He built a bridge from I can't remember the platform he trades on, and then he built a bridge to NT5, and he's managing like 16, 17 million for us or something like that. But he trades on futures and then just has it bridged to MetaTrader.
So do you trade again, or like with Darwinex? Is Darwinex a broker or not?
Yes, we're a broker, but we don't have a B book license. We purely A book traders and try and capitalize on traders who have solid track records. It's been a slog, and it's taken us 14 years to get to a point where it's kind of like, oh yeah, actually we're making good money from this process, and actually that period of time has probably paid off. But as you know how toxic the broker industry is, it's like they're preying on traders who they inevitably know are going to lose, hence why they're paying affiliates $1,000 in CPA commissions. We can't do that, A, because of regulations, but B, we just don't have enough margin because we don't B-book the traders until more recently, where we've started backing them with larger amounts of capital and really kind of backing the horses that are set out to win instead of making money from the guys who we know will lose. Our CEO, Juan, uses a great phrase that I really like. He says the industry is built on death time value, which is essentially how much value can we extract from somebody before they die. You know, and when we say die, we don't mean physically die, but you know, lose all their money in the broker and walk away, or the funded account, or what have you. Whereas at Darwinex, we're trying to extract the lifetime value. You know, how can we help this trader grow? How can we help this trader scale? How can we build their lifetime with Darwinex? Which I really love that analogy, because I speak to so many of our traders and I'm very front facing for the business, and knowing that that's how the CEO and the C-suite are thinking and they're kind of how they build the business, it makes my conversation so much easier, because I'm like, you know, listen, if you don't want to build a record, if you don't want to scale, which I don't think is for everybody, I'll be perfectly honest, then we're not the place for you. Because guess what? I don't we don't want your money. We only want your money as a client if we know that you are going to look to scale, because we want to monetize the top traders. We don't want to monetize the losing guys.
Well, and that's why I wanted to have this conversation, because I think that as a trading podcast, yes, people want to learn about trading techniques, tips and tricks and whatever, but we also absolutely need to know about commercialization paths, what it would take to step it up. So what does Darwinex look for then in terms of metrics, length of track record and so on, trading style, if they're going to start looking to allocate? What are the things that would make someone noticed?
First and foremost, to make them noticed, you've got to have strong performance, right? Because
so what does that mean? Can you give us an idea?
Yeah, so you you have to have consistent performance. So when I say this, I don't mean you need to be the top trader from a P&L perspective, but it has to be consistent behavior to P&L. So we need to look at your loss aversion, your average holding times, your risk stability, all of these different metrics that give us an insight into how the trader behaves and how they act. So, oh, great, this trader's just made 80% this year. Oh, yeah, but he did it all in one trade, and really through everything at it. Is that somebody that we want to add into the master fund, into the index? I don't know, because we're basically betting on this guy every year makes a massive trade. How repeatable is that? We just don't know. So we have a metric called experience, which takes into account your track record length and the amount of decisions that you make, i.e. Entries and exits, effectively. And it gives you an experience score, which you can't really fake no matter how good your P&L is. The higher the experience score, the more data that we have on you, the more robust our data is. So we can say, okay, this guy, we know within a 95th percentile will perform this way in the following 2 years, 5 years, 10 years. Again, things like loss aversion is massive for us. We want to know, is this person going to continue to trade the way they do, or are they massively exposed to tail risk that kind of is unseen? Because we will pick up on that sort of stuff. So martingalers just have an absolute nightmare at Darwinex, because we see the metrics before you kind of see the tail risk event happen in real time. We know that you have massive maximum adverse excursions compared to your MFE. We know that. We see it. It's
that must help you become a better trader too, Kieran. The fact that you get to 100%. Be thinking about all of this, what makes a good trader. It's like obviously you're feeding that back into your own data bank on a continual basis.
Well, I for a long period of time, I ran live sessions every single week doing Darwin reviews, where I would go spend an hour live with the audience going through their track records, and you pick up stuff without even realizing that you've picked up stuff. And it's kind of a double-edged sword, because you can look at it and you can go, well, I'm learning all this stuff, but then it kind of also can give you a bit of analysis paralysis. I'm down on Mondays. I'll stop trading Mondays then. Yeah, but it's such a short, it's such a small period of data. You can't really make a decision based off of that. So after a period of time, I started saying to people, listen, if you come into the session and you want your record analyzed, a minimum of 6 months, unless you're some high frequency scalper who's got 10,000 trades, then maybe I'll look a little bit earlier. Because what I didn't want to do was give people information that was going to actually harm them instead of help them, in terms of me saying, oh, well, you lose money every Tuesday. Why are you still, trading on Tuesdays? Rather than it being like that, I'd be like, okay, is there a pattern that we can take a look at here? Is there something that, we can analyze within that? I used to tell this story a lot. I did a one-to-one session, and going back to your point, like helping me learn, you'll understand why. I did a live session with a couple of people actually, and there was this girl who I had the session with, and I can't for the life of me think of what day it was now. I think it was a Tuesday or a Wednesday, and her performance dipped on that specific day compared to the rest. I started to go, well, is it just the sample period that we're in and, just coincidence? Let's try and figure it out. So we spent a whole session of trying to dive into that. We started pulling up her trades, and then I started to notice the pattern on her trades. And I'd be like, okay, well, you're entering at this time of day usually, on the other days. And then you're entering slightly earlier on this day. What's the reason for that? And it was just a case of somebody else looking at her positions, looking at her metrics, and being able to spot something that she thought was just a problem and couldn't diagnose it. And it turns out that was a 1 day a week where she did the school run. And so she was getting up earlier to trade, rushing whilst getting a little one ready for school. and entering and, obviously working outside of her plan, because the rest of the week, and she was a great trader, like, and still is. But it was just this one simple thing. And she was like, oh my God, you're right. I never would have thought about that, because she goes, my trading session is London. I'm like, yeah, but London is a long time. That's, it's like 8 hours or however long it is. I'm like, what you need to do is go, if I'm not at my desk when I should be trading, then I need to not trade. I need to understand that that's a bottleneck for me. And anyway, she overcame that. She stopped trading until she got back, and then she'd check if the move was had already happened. If so, she'd stay away. And then there was another guy that I worked with, which I always laugh when I tell this story because I find it hilarious. It was a very, very similar situation. It was on the day of the week, and his Friday performance was really, really poor. And so again, I did the same sort of thing. I sat down with him and I said, right, let's try and find some patterns. Let's understand why this is happening. Is it because, Friday's sometimes heavy on, higher impact news events and stuff like that? No, I don't trade through them. Okay, so are you doing anything different from a strategy perspective? No, I'm mechanical. I do the same thing. So anyway, after hours and hours and hours of conversation with this dude, it turns out he works on a building site in the UK. And so every Friday they finish at 1:30. So after they finish, they all go down to the pub together, and he has a few beers, gets his phone out, starts trading for whatever reason at like 5:00 on a Friday night. And
this is why we become systematic.
Exactly.
Yeah.
And when I found that out, we started to look at his execution times. Okay, where was you when you I felt like I was a teacher, like telling a student off. I said, like, where was you when you executed that trade? Oh, well, I would have been at the pub.
Yeah.
Why are you trading from your phone at the pub? Like, it's clearly messing with your performance, and we can see that from your metrics. But at face value, you won't know what's causing that metric to be worse than the others, or the outlier, which takes a lot of diagnosis, and that was a really difficult one to diagnose.
So, Kieran, in terms of funding traders, Darwinex would always want to have a conversation with them first. It's not just based on the numbers.
Not particularly. If it's our own capital, we have enough information from a data perspective. We see what they do, we monitor them, we test them with live capital before we allocate them into the master fund anyway. I mean, there's multiple ways for somebody to get allocations at Darwinex. We have like virtual allocations, which we back with real capital. Then we have investor capital that we are out of our control. You or I could sign up and allocate. Not financial advice, just FYI. And then we have the Darwinex allocations specifically. So we have Darwinex Labs, which is where it's kind of our testing ground for the traders. So if we notice a trader who has promise, there's a gap in our fund for them, we'll allocate them kind of a small amount of capital to test the waters with them. What we found is it doesn't really matter how much capital we give. It's more the fact that, I've got my first investor. Does the trader get all giddy, or do they continue with their processes that they've been showing us for such a long period of time? Once they prove themselves there with that capital, we then move them across to the fund if there's room for them in the fund. But to answer your question, we know a lot of our traders. We do know a lot of our traders, but it's not a prerequisite that we have to know, your name, your social security number, who you are, where you are. It goes against everything that the platform was built upon. Was built upon being a meritocratic marketplace where your performance and how you are as a trader is your selling point, and not how well you can speak to people, or your age, your gender. None of that. It's your choice whether you want to remain anonymous.
Yeah. Okay.
100%. And I kind of like that, because it gives guys and girls the opportunity to let their skill set do the talking. I'm good at talking to investors and talking to C-suite guys because I do it at work, and I've done it for years. I enjoy those conversations. I speak to many, many, many traders that are like, oh my God, I'm so nervous just talking to you, because I don't usually talk to people. And I'm like, oh, okay, so you would do no well raising capital or going and applying for a job at Jane Street or something, because you can't even speak to people. And I like the fact that we open the door for somebody like that who might be a phenomenal trader, but just has no idea of how do I get capital? How do I scale? How do I become a professional? And listen, I'm not saying that Darwinex is perfect. We're still figuring a lot of things out. We've grown immensely, especially over the past couple of years, and I'm really, really proud of that. But we're still learning. We're still looking for ways to make the experience better for traders, to scale more traders, to scale the traders that we have even better. But there's a lot of things that go into that, of course.
So a couple of questions just to round this off for me. One, I wasn't sure how clear you were around the track record in terms of length. Is it fair to say that you probably need to have been trading for a good year before it starts to make sense for Darwinex to look at you?
Yeah, I would say you would be very, very lucky to get serious investment under a year. You might get put into Darwinex Labs. Again, going back to the experience metric, depending on the frequency of your trades, like if we have more data, we'd be more comfortable sooner on. But when we're talking about, the index, which the minimum allocation is like 1 million, maybe just over 1 million, you're probably looking a year or so. And
you can import your track record, can't you? Yeah.
If you're trading through Darwinex, you can import your previous record as long as it's from, a regulated broker and their feed matches ours. It doesn't have to be tick for tick, of course, but as long as we go, these fills and the execution was true to life, we can import previous track records. And then you go through a short calibration phase where we measure your live trading compared to your track record, because believe it or not, we've had people in the past upload a martingale track record and then they've started trading completely differently. And we're like, come on, you can't pull the wool over our eyes. But there's, that's it.
What about someone like myself who trades generally on daily bars, longer term, more of a traditional fund manager kind of approach? Is that equally as strong a potential, or, is there a favouring of that shorter time frame?
There's no favouring of any style or any asset or anything like that. We're running the index as a diversified portfolio. So we need diversification within. We don't want, 100% of the traders all intraday trading the NASDAQ. Makes no sense. We may as well just allocate to the top 10 instead of the top 100. So there is no preference. And actually, the more different you are from other people, I would say the better chance you probably have of being. I don't make the decision, so I can't say for certain, but there's less competition to be fighting for that specific gap within the master fund. And this goes outside of Darwinex as well, right? Like if you were to go to a prop desk or a hedge fund, investment bank, wherever it is, and you say, oh, I trade an uncorrelated portfolio of systematic strategies, and they go, so does everybody else in this room. What is it that you bring? Whereas if you walk in and you say, listen, my exposure is specifically on X, Y, and Z, and they go, oh, well, actually, we don't have any traders that do that. You probably fit a gap better than, every Tom, Dick, and Harry who comes in doing the same old thing. That's the way I see it. And I know the process that we go through at Darwinex Labs, and it is very data driven with a slight discretion at the end of it. But when we go through the data, we kind of figure out your style of trading anyway. Are you algorithmic, or are you a manual do you execute manually? What's your average holding time? A longer period of holding time is fantastic for capacity perspective, which is what we want and what we need. We need more capacity. So there's no kind of discrimination based on how you trade.
All right, Kieran. Well, man, that's fantastic. I reckon we can wrap it up. I'm really glad to have had this chat around, like something that I guess the more retail end of traders, which let's face it is probably 90% of the people watching this show, can think about in terms of how to step it up and work toward actually becoming professional. The fact that, and this is what I mentioned with Martin when we spoke as well, the fact that if you're looking at it from that angle, it's going to change the way you trade. And no doubt once you started trading, OPM, other people's money, it maybe changed your thought processes a little bit, your risk management,
100%.
your attention to your risk and so on. So if people can be aware that that's an option, then why not shape the strategies that you trade and the way that you trade around the possible commercialization path? And it's a path that you can make a lot more money out of compared to just trading your own money. And of course, the simple example there is, well, if you can make 25% a year on your own money, well, then that's really great. If you can make 15% on a much larger pool of money, you'll make a lot more money. So, it's a very viable path, and it can actually make you approach the trading endeavor from a lot more sensible, better risk managed perspective, and you know that you can still actually generate a real income out of it. In fact, it's probably a much more likely way of generating an income out of trading than just trading for yourself. So this is why I thought it would definitely be great to chat. So it's nice to follow up after Martin, just to deep dive that a little bit further, hear a bit about your own trading, your own journey. Definitely, you remind me of all the experiences that I had and the people that I hung around with as I went through that journey through discretionary trading and trying different things, becoming systematic, and then actually getting funds under management. So congrats, and very cool to chat. Let's do it again. Anything else that I've missed, man, that you want to cover off or?
I mean, we're going to talk about Claude Code,
but
we've been talking about that for so long.
yeah. Give us 5 minutes of we were talking about how we're both heavily engaged at the moment in using that intern called Claude Code. So is there anything in particular that you've been enjoying doing with AI lately? How's it feeding into your trading process, changing the way you trade?
I mean, first and foremost, if anybody's listening to this and you haven't done a deep dive, full, open the can of worms, gone down the rabbit hole into agentic coding, please do so, because it will change your life, not only in trading but also external. So a lot of what I do now, and a lot of my focus goes into efficiency. How do I become more efficient in every single thing that I do, whether it's replying to emails, whether it's trading, whether it's whatever it may be. In fact, I got that sick of having multiple terminals open on my machine, because for Claude Code or Codex, I use the CLI terminal. And I was that sick of having like 10 of them open and not knowing which one was which. I actually built my own platform so that I could have all the terminals built into the platform. I could rename them. I could reorder them. It took me a couple of days to do that. I build in a couple of trading apps now, which are kind of filling the gaps of everything that I wanted. And these are for personal use, right? I mean, at this point, I don't have plans to commercialize it. It's everything that I've learned about systematic trading in this time, and all of the bottlenecks I've faced. How can I solve them all in one app that is a second Kieran? So at the minute, I'm building my own IDE with, Claude or Codex built into it. I've come to a bottleneck where it was, you have to have your API keys and it runs on the API. And I was thinking, well, I already pay for like the max plans of Claude and Codex anyway. So then I just built the terminal inside of it and got that to work. And I was like, oh, great. Like, this is exactly what I need. So for example, if I've got a previous code base for a strategy, I can just import it. And if I want to make some amendments, rather than, I'm not a coder by nature. I can read code, I can write code. I'm not an expert at that. So the platform that I have will edit the code for me from Claude or Codex. I can watch it in real time, and then I can test it within the platform as well. So before I even take it to a software to go and run back tests, I already know, have I blown up the strategy? Or sorry, has Codex or Claude blown up the strategy? Or has it worked? Has my end goal worked? So there's some really like interesting things I'm working on personally for efficiency when it comes to trading. And also going back to like the order splitter, I built that with Claude. I gave it a very detailed brief of what I needed, and it did exactly what I needed it to do. I then handed that code over to Marty, who is a quant, who is a fantastic developer. And he then open sourced the code for the whole of the Darwinex community, so that anybody can take the code and include it into their algorithms so that their orders are split automatically. He changed a couple of bits, but the majority of the structure was kept. I think he said something like 80% of the structure remained. He just added in a TWAP to the actual execution, which kind of tells you the quality of the code. When our quant was like, do you know what, this is pretty solid, I'm just going to add one or two different things in. And so, yeah, of course, you need to check everything. You need to test it all works. And I usually set up a bit of a competition between Codex and Claude. And I'm like, you're reviewing Claude's work, so be brutal. And then I'm Claude, Codex is watching, so you best not make any mistakes. And then they're kind of training off of each other. One of the things, I know you said it earlier, Simon, one of the things that's kind of a bit of a cheat code if you are doing agentic coding or integrating Claude or Codex into your workflow is utilize markdown files. Like if there's anything that gets spoken about between you and the agent, get it to save it in a file, because it will always reference it later down the line. There'll be less hallucinations. There'll be less anything. I have like, it's embarrassing, but it works really well. I've built like a team of agents. I've given them all identities, personalities, all, and all the rest of it. They know me because they have access to my files and who I am and what I'm doing. But then each of them has a history file and a memory file. So if we're talking and I say something, even if it's a throwaway comment, the agent will be like, Kieran's just said he's out for dinner next Wednesday. I'm going to note that down because he's not going to be here. And it's quite a surreal experience because I have a team and I run them all in my multi-shell app. And I can just have conversations with them, and it's amazing. And I do that for my trading. So those team members are like working on my portfolio, as in not just building new strategies, but taking a look at what we have, doing investor reports, all of these different things that like I'm not an expert in. I'm just trying to be as efficient as possible. And like I say, it's a little bit embarrassing, but I don't care because it's the workflow is just phenomenal. We're all
just learning, man. And with AI, like what really worked last month is completely out of date this month. Cool, man. All right. Well, a real pleasure. I know we're going to keep in touch and do some interesting stuff together. And it's like I said, it's just an important way for traders to think along these lines. So I hope this has been helpful. And thanks once again for coming on, man.
I appreciate you inviting me. Like I said, I feel like I'm walking on the shoulders of giants. So it's an absolute pleasure to be here.